Greetings, Dr. Jeffrey Scott. This is my weekend stock market update for 9/11/2022. I entitled this one Bull Trap with a question mark. My email address is hgsidoc@gmail.com. If you're new to my channel, please hit subscribe, hit the alarm. You know when I post these. I don't post them frequently, usually on Saturday or Sunday, but occasionally I'll sneak one in during the middle of the week. And if you have any comments, please pull them in underneath the video or send me an email. And I'm always willing to listen to constructive criticism. Please don't criticize the audio this week. I am sitting in a hotel room in Paris. It's a sunny day at 4:30, and you might ask, why am I doing this? It's because football doesn't start for a little while longer. So I figured I'd get this in before I start watching my fantasy football games. As always, it's for educational purposes. Any recommendation in the spirit of education should not be considered investment advice. I'm a doctor, not a broker. I use a lot of tools, but I've paid for those tools, and I use them every day in my trading. And trading involves risk, and you alone are solely responsible for any investment decisions you make. For those who don't know about this is a great event. It occurs quarterly, and I get the opportunity, the pleasure to present one or two times during each event. I don't know for sure, but typically it's early in the week at 11 o'clock and then on Saturday at 10 or 11 a.m. as well, Eastern time. And here's the link. You can stop the video, write down the link. It's a simple link. Please go ahead and register, and I'll probably remember to post it in the YouTube video area as well. If you like these videos and you want a very short version, I do one every morning. Sometimes I do it the night before, probably most often the night before, and then it gets posted by the folks at becomeabettertrader.com sometime around 9 o'clock in the morning. It's a shorter version of this and kind of gives you just a quick intro to what I'm thinking is going on. Now, if you really want to know what I'm thinking, why don't you come visit me in Florida? Used to do these as a regular basis. Always enjoy the live interaction. I don't do these as a way to make money. But I learned a long time ago, if it's free, that's people give it about as much credit as what they pay for it. So I'm going to have a live meeting. It will be December 4th and 5th. My buddy John Person has a meeting December 2nd and 3rd. And then details to follow, but assume 2 days of education. I cover all the meals beginning on the 4th and ending on the 5th. That includes a over-the-top dinner at a local steakhouse on day 1. All attendees will receive recordings of presentations and will feature use of my favorite programs, Wealthcharts, HDSI, EdTrader, Q-Tools, TradeStation, and TOS. If you're wondering about can you bring your spouse to the meals, the group meals, no. The dinner, for an extra $100, you can bring your spouse. I'll lose money on it, but it works. If you're interested, please email your non-binding interest so I can gauge how many people are coming for the room. It'll be live only. I'm not planning on doing it online. I get hung up with making sure the people online technology is working. 2 days, most likely in Palm Beach Gardens at the Hilton, still to be determined. I'll record the sessions from my screen for the attendees. As I said, meals provided at $1,000 per person, and my email address. Right now, just tell me you're interested so I put you on the list. So when I cut off the numbers, I'm going to limit it to 15, I can send you out the official invite. So hope to see you in Florida, not next year, but actually this year. It's been a long time because of COVID. Now, I used to go through a very lengthy PowerPoint, and I did the PowerPoint because I thought it could shorten the work and allow me to run through some of the output from different programs. I found that I can do this as well by using the spreadsheet. So that's what I do here. So I start with a screen from HGSI, and let me just make this full screen. There we go. And what I'm basically looking on the top half is the major indices, and on the bottom, the S&P sectors. The ones I paid most attention to are one day, you could see everything was up with Bitcoin up over 10%, 11%. The only thing down was the dollar down. That's good for the markets typically. Over 5 days, you could see a lot of strength, but you could also see that in things like Bitcoin and ARK Innovation, much of that strength came in on Friday. And oil and commodities were actually flat on the week. and most of their, that what got them out of negative territory was a big performance on Friday. Remember, it was a 4-day, so the 5 days a little bit skewed because it looks at the prior Friday, which, if I remember correctly, was not a strong day. So that the performance over the 4-day week is probably even greater. Notice that if you look at off their 52-week highs, the Dow, the NYC, and the Spider is 12.8 to 15%, while the small caps and Qs are 23 to 25%. So clearly the large caps, and no surprise there, have held up better than some of the smaller caps. If you look over here off their bottoms, you can see the June bottoms on the Dow and the S&P, as well as on Russell NASDAQ, have held. We're 85 days off of those, and you can see 15% on the small caps and technology, 12.3 off the bottom of the S&P, and 8.7 on the big caps, the Dow and the NYSE. So those numbers have come down some, but it does show that we're still in this pretty significant move up off the bottom. Now, do we continue going up? Do we have a double, triple, quadruple bottom coming? Still to be defined. I am in the camp, however, that I think we still go down further. If you look at sectors, you could see sector performance. You could see how they performed off the 52-week high. And again, this week, everything was green. Everything was green on Friday. Another way of looking at the markets is to get a sense of, where the stocks are, where do they close. Let's see if we can get that fixed. Oh, come on. It was working fine before I changed that. So this is from Q Edge. And on the top, there's so much information. It's a dashboard. And the dashboard to me is extremely useful. Let's try that one more time. There we go. It shows me that on Friday, all the sectors were green, 96% of the industry groups were green, and 90% of the stocks were green. Hopefully you had a very positive Friday. Down here you can see the individual sector performance. And the reason why real time doesn't have anything is because it's Sunday there and here. Next thing we can look at is the buckets, and I'm going to defer talking about this until I get to the EdgeRater buckets. But the buckets give you a sense in EdgeRater real time of where the stocks are sitting and gives me early awareness of a change in the market. And we saw that this week. If we look down here, we see the top is sectors and industry groups and stocks, and you could see over the 5 days, all sectors were up. 86% of industry groups, 81% of stocks were up. And then you can look at, there's a big turnaround there because over the last 2 weeks, everything is still down. So despite the powerful move that we saw in the 4 days after the holiday, we're still down when you compare to looking at 2 weeks, month more neutral. The warehouse report allows me to take all the stocks in the market and then see how various parameters impacted their response. And the main one I like to look at is ERG. And if I look at the markets between the 4th and the 9th, so the close of the prior week to the close of this week, I get a sense of what were the drivers. Now, the most notable thing is, except for a few stocks at the tail and a few stocks at the head, and you can see the number of stocks here is very little, the markets were incredibly strong with, 5 or 6% on average of the low ERGs and still positive on the high ERGs. Okay, so the market had a broad-based rally. Over here, it tells me that earnings really helped if you had strong earnings, but everybody did about the same. Here it tells me junk off the bottom, stocks with low relative strength actually outperformed on the week. This is the performance. These are the relative strength deciles. And stocks that were accumulating the prior week actually underperformed. So that's a picture of rotation. Rotation, rotation, rotation. If we look at some of the major indices, one of the favorite thing I looked for is the Hindenburg Omen, and I don't expect to see it until we get to new highs, and that would be over here. But I like to look at things like the percentage of new highs and new lows, and notice that the percentage of new lows in red here on the NASDAQ dropped to 1.23% on Friday. Not a lot of new highs, but the new lows are weakening. The weekly bongo, which is an important buy-sell indicator to me, unfortunately, is still in sell mode. If I look at the NYSE, you could see the weekly bongo flipped. It had a kahuna, which is a momentum move to the upside, and notice the vanishing of new lows. So maybe something is happening here. Maybe it could be more than rotation. We can't tell as of yet, but clearly there's a positive move in the market. Now, this to the lower left, the accumulation of these stocks below the Bollinger Band and the lowest decile of the Bollinger Band is a signal that the market is going to move. This is how we ended the prior Friday. On Tuesday, it got further stocks below, and then we reversed. And this is where we are today. So we've come off oversold areas, and we were very oversold. And we talked about that last week, that we'd expect to see a reversal. Energy on the week here is mostly red, although you had strong oil, gasoline, nat gas on Friday. Look at nat gas on the week. It continues to be extremely volatile. Metals, with the weakening dollar, should have done well at the end of the week, and they did. And you could see on one-day moves, very positive across the board, but over the week, yeah, still positive, not positive over the month. So it'll be interesting to see, will metals continue what we saw this week and continue to rally, or will they resume their weakness? A lot will depend on the US dollar. Now, this is the dry bulk index, and this is the spot price. It has a lot to do with the pricing of Zim and Star Bulk carriers, those that carry dry goods, not energy. And you could see this is at its 12-month low. It doesn't give a good story for the pricing and therefore the performance of the dry bulk shippers. That's why I look at it. Interest rates, you could see up here, the 10-year took out the prior high, 30-year is up. So it's kind of a shocker we had such a good week on rising rates. Over here we see the credit spreads, and they've come off the highs. This is the, how tight money is, how difficult it is for companies, especially growth companies who might need credit to get it. I know a lot of companies in the healthcare technology space where they're being challenged right now in raising money. I think that's a sign of that. This here is the yield curve, and it's still very inverted. And I just point out these bars here, which could represent a recession or weakness in the market because they go hand in hand. They don't occur when we're underneath. They occur when the rates start going higher. We're not there yet. We still could see a significant recession. And what does that mean? Bad for the markets, which is why part of me does not want to believe that this is over and that I think this is just a bull trap, or could be a little bit more than a bull trap, but I don't see it going to new highs anytime soon. But as a perma bull joke, I hope it does. If we look at stocks above the 200, stocks above the 40 in white, they both bounced a bit this week. If you look at the 12-week new high, new low, it did a total reversal from last week to this week, and it went from, boy, we're getting close to reversing, to, boy, we're getting overbought short term. So the market's had a big move. I don't at all say overbought right now. We're still below on the above the 20, 200 above the 40. We're way off where we were. But on the short term, that was a pretty big move. Economic news, there's a lot this week. I think the big thing is going to be the CPI and the data around it on Tuesday. But we get some inflation expectations from the Fed on Monday, jobless claims on Thursday, some producer price index final demand on Wednesday, and Go Blue, University of Michigan consumer sentiment on Friday. So there's quite a bit of potential movement there. I don't see any Fed heads on my list who've been talking down the market by talking about tightening and more rates. Interesting thing, last week the markets ignored it. Earnings season slowing down. Doesn't mean it's over. Stocks like Oracle and Adobe are widely held. So are many of the other groups' stocks here, so something to be careful of. And as I used to say in my PowerPoint, it's a judgment call to hold stocks over earnings or not. It's just bad judgment to not know when your earnings date is coming. The expected move, they give us kind of a picture of what happened in the market. Let's just blow this up. If it's, oh, there we go. And for whatever reason, there we go. So here is the E-minis. So here's where it ended the prior Friday. Remember, I told you Friday was weak, so the 5-day performance is inferior to the 4-day performance. But notice on Tuesday, the market's traded lower. So the expected moves, you bought a straddle at the money, which means you bought a call, you bought a put. The delta, or the difference between the gray line and the green, is the amount of premium you put. Gray line and the red is the amount of premium you put or paid. And so you have to clear those to make money. The smartest money in the world is the money makers, option makers, and they're the ones that set the price, and they set the price so they win 80% of the time. We've had one week after another of closing outside the range, which could be, as Cigar pointed out to me, could be related to some of how Thinkorswim is doing it. But to me, it still shows the volatility of this market. So we traded down on the first day, which was not Monday, it was Tuesday, and then up Wednesday, Thursday, and closed above on Friday. So you would have actually made money if you bought that call and put, although you closed just above it. If you did a straddle on the NASDAQ futures, you also would have made money, a little bit more outside the range. Similar on the Russell and on the Dow and the Russell. It just shows you the power of this week in the market. The VIX traded down to the bottom, closed within the range, and the dollar actually had a big move down on Friday, but still closed within the range. So what are my thoughts? Markets entered the holiday shortened week on a 3-week losing streak, and after a head fake on Tuesday, the markets continued higher at end of the week on a high note as both the S&P and the NASDAQ closed above their respective 50-day SMAs. Plenty of negative news flow. The markets ignored it, whether it was slowdowns in China, Russia shutdown of the Nord, one of their pipelines, longer than people expected, which will cause natural gas issues in Europe. Rate increases in Australia, Canada, and the EU, bearish Fed head commentary. None of that broke the market, which is shocking. Despite the rally, rates rose on the week. Megacaps did lead, and all 11 sectors gained. It'll be interesting to see if we got a follow through this week to the upside, or was the rally just a holiday cheer? Volume should also increase this week as folks have returned from summer in the Hamptons. I have continued to deploy cash, but I've tried to avoid FOMO. Now we watch and see if this is the beginning of a new leg higher or just a big oversold bounce within a bearish move lower. I still favor the latter, but I have to play the market we have, not the one I think we should have. So as I sit here in Paris, looking out over the city, I continue to have some cash on the sidelines. I've increased exposure with tight leashes and have sold off all, if not most, of my short and contra ETF positions during this week. So that's my thoughts on the market. Again, I remind you and hope to see you at the Wealth 365 event. I will put that link underneath the video on YouTube, and I will also have the link for the stocksanddocs.com site. All right, close that. Let's go look within Wealthcharts itself. If you don't have Wealthcharts, it doesn't mean you shouldn't come to my live meeting, because as I said earlier, I'm going to use a lot of different programs, and frankly, I'm going to teach you how I trade, some of the indicators I use, some of the different tools that I like, and then I'll use whatever tools you have. And in some cases, I can share some of the indicators. When people have made things that are proprietary, I don't share them. So we'll start here by looking at the hot stocks. So I'm not looking at stocks here, I'm looking at ETFs. In the last couple of weeks, there have been almost nothing showing up under the hot stocks under ETFs. To be considered a hot stock on an ETF or a stock, you have to look here and notice the time frame here on the day trader time frame, and that's the time frame I watch this, because on sector and industry group rotation I go very short term. You can see it moved up, but you can also see the numbers are kind of low. They're not 700 or 800. So the good news is that we have a lot of hot ETFs to the bullish side, perhaps consistent with a short-term rally or beginning of something more. And but the downside is none of them are at big numbers that tell me that they have a lot of strength. So it just could be the start of something. Now, agriculture business being the high one there is interesting to me, because stocks like
Alexis Scott, FaceTime.
CF, MOS, SQM are all in interesting buy points, or doing well. and that's within that industry group. So I always start with that, and I could look at bullish or bearish. You could also use it, and I wouldn't put giant lists in, but let's say you're interested in NASDAQ stocks. Regeneron had a huge day on Friday, and even though I'm in healthcare, I don't know exactly what happened. Looks like they had some positive news. I don't know if they had earnings, but you could certainly find that out. The next thing I do is I go into the indice dailies, and I've got this set up so I can look at spiders, Qs, diamonds, IWM, UVXY, and the dollar. And I like putting trend lines on. I like watching things over time. So if we think about the markets, we know they had a big run up over a long period of time. Here's your run up. And then you had a change from higher highs here and higher lows to lower highs and lower lows. So that was the end of the rally. We had one leg here down, two legs down, and it looked like we were in the midst of our third leg down when we've just now started a pretty strong rally. Now, it becomes complicated whether this is part of the second or was the third and this is the fourth. I think you can make both arguments, but I think I've been looking at this as the second leg and this is the third. Now, what I like about this chart is we did not get down to the June lows, which are the yellow. We did get above the 50 and close well above it. We had an EMS signal. Both the daily and the weekly bongos turned green. That's all very bullish. I still got to get above the June highs and that 200 before I want to believe we're going on to something meaningful. Now, I like to always talk about the three scenarios that I'm watching. So scenario number one is this continues. Now, that's not what it would look like. It would look more like this. Okay, so that's scenario number one, and that's the bull. That would be awesome. Scenario number two is that was all false, and we go down here and we retest, which is what I thought we were going to do, which I'm calling now scenario number two. Let's call it number three because it's the bearish. And that would look more like, it's not straight down, but a series of lower highs and lower lows and a retest on the June lows. Or what we might see after this big move up is some digestion. And then hopefully a break higher. So to me, those are the three scenarios that I'm going to prepare for. Right now, market looks like it wants to go higher. But I have to be aware that scenario two and scenario three are also at play. Let's look at the Dow, the Qs rather. Very similar story, closed above the 50, awesome. Not much to say, volume was okay, at least it wasn't low. If I look at the Dow, the diamonds here closed right at the 50, sort of sitting right on top of it. Low volume, again, the same pattern, broke out of the downtrend here, pulled up into the 50, and let's see what happens. It's not out of the question to see us fail there. If we look at the Russell, again, similar pattern, 200 failed, broke through the 50, concerned about the June lows, but it bounced and got back above the 50. So now we see if it can take out the 200. So markets definitely improved over the week. If I look here, the volatility was weak, and I think really helping the markets was we had a really nice drop in the dollar. Commodities, dollar week, you'd expect to see something happen with gold and silver. And you even had an EMS signal on silver. At some time, gold and silver are going to get better. I think these moves are very risky because they're so far below the 200 and the 50. Doesn't mean you can't play them as a swing trader or a short-term trader. And one of these days they are going to break out. I think it's more dependent upon what the dollar does. If we look at U.S. oil, it actually had a gap up, closed higher on Friday, running into the 200. And natural gas had a tough week, but stabilized a little bit on Friday. Again, sitting at areas that you might build some support at for a higher move, but nothing too exciting. Bonds, this is the 10-year. You could see it's just holding in the same level at 3.321. But if you look at it, it's held this gap up here. So rates are higher, and that's not always a good thing for growth. My weekly timing model, this is from, we talk about this on a weekly basis. On the spiders and the Russell, we've actually got weekly bongos are green. On the Qs and the diamonds, not yet. We are struggling and trying to get above the 50 weeklies. We're close on the spiders and the IWM. We're not above them on the Qs and the diamonds, so trying hard to get back into an uptrend. If we look at the market themes, let's look at the weekly. So this is big caps versus small caps. Up in the top half of the charts favoring big caps, but notice over the most recent period of time it's been trending down. This is growth versus value. Values favored down here, and over the recent days growth has shown some improvement. A move towards small caps and growth would be good for the types of stocks that I trade. S&P sectors hourly, I've created ratio charts with looking at the S&P sectors versus the SPY. And then I stand back and say, where's the strength? Well, it's pretty clear. Energy's moved off the bottom and finances gave up a little bit at the end of the week, as did industrials. Technology has weakened considerably. Look at healthcare. Look at discretionary. So the strength to me right now is in discretionary, setting new highs versus the spider. So discretionary stealthily has moved up. Some of the defensive plays, staples, real estate, and utilities are pointing down. And healthcare got slammed. I think we're seeing some movement in biotech. So if I had to rank them, I'd say energy, financials, industrials, discretionary, and trailing them would be healthcare. Okay. I'll go into my bull scanners. Let's just look at the heat map. Here I am looking at the S&P 500 from Friday, and you could see how strong it was with very little red. So most likely you made a nice day in the market. If we look at the sector scanner, let me just return to subsector. Okay, so that should make it quick. There we go. Everything was up on the week. Everything was up on the day. If we look on the back on the week, healthcare, materials, interesting. Defensive, staples. It's interesting when you look at that because I'm seeing evidence that what's leading the market and what's going to lead the market, we said, look at cyclical, which would be discretionary, showing some strength, and financials, and industrials, and healthcare. Did I miss anything? Let's go back here. Energy, financials, industrials, discretionary, and maybe healthcare. Okay, let's go back here. Healthcare, industrials, financials, technology. Let's go hit compare, and that brings up the top industry groups. And let's just go by algo score. And let's take down to here. Let's do the weekly algo score and make sure we have all these checked off. So what I've done is I've taken the top sectors and I'm taking the top industry groups in those sectors. Now I'm going to hit compare and it's going to show me the top stocks in those sectors. And let's just do algo scores and let's go down to 450. Now I'm going to take these stocks and drop them into my bullish review. So default, make it the longs because I'm bullish this week. Apply, and then let's just add these to the watch list. Okay. So I've added the top stocks to a watch list. Now let's go over to Wealth Scanner. I guess it's still working on it. Okay, I'm now in the wealth scanner, and what I'm running is my top-down indices through the wealth scanner, and I'm looking for strength. Now it's funny, I showed you the utilities were weakening, but they've been strong for a while. Short the bonds, solar energy, energy production, dollar all at the top. But again, as I pointed out, these numbers are kind of low. Um, if I look, for example, at the bear market scanners, wealth scanner indices bearish, let's let that run. I am on slow internet, by the way, which won't affect your video because it'll just take longer to load. And again, the numbers here are relatively small as well, but short bonds are weak, munis are weak, volatility is weak, silver, ARC space, ARC autonomous, semis, technology, no surprises there. So let's go back to the bull scanners. And so I'm not really going to get a lot from this because I don't like, I'm not going to go look at utilities right now. They look like they were starting to weaken. They're in the back of my mind, especially when this market weakens, and nothing there is standing out. So I go to the CAT scanner, and now I'm sort of doing a bottoms up, except I'm doing a bottoms up with our top down list. So this is my weekend review. Let's just look at what I put in here. 5 and 500,000 shares. You got to have options. I'm not asking for liquidity. At least one bullish dot, no bearish dots. And sometime within the last 10 days, I'm hoping to see a reversal where you were in a short-term downtrend. Now you have an uptrend. So that means I want daily bongo bullish and weekly bongo is bullish. Then I'm going to rank you by dots and start off here. So DHT is a shipping stock, but it's an energy shipping stock. And this is one that's on my watch list. And the reason why I like this stock was you have a strong uptrend and a pullback. You were in a squeeze and you had 2 days in a row with 3 or 4 dots. Why aren't you having 4 dots here? I'd prefer you had 4 dots, but the way I coded it is if you close below the top third or top half, you lose the 4th dot. Bottom line is you had a nice gap up, you held the gap, you closed in the top half of the day, you had a breakout, you have big volume and momentum from a squeeze. Your relative strength and OBV are supportive. This is one that looks interesting. Now, what's the downside on this stock? You could say it's getting extended. I think it probably goes higher. Krogering, another 4-dotter. And let's take a look at this. A breakout above the 200, the 17, and the 50. All 4 dots on massive volume with supportive relative strength and OBV. Zscaler, this is an earnings play. Here's a stock that used to be almost a $400 stock that most recently was a $140 stock. And on earnings, we had a big gap up on massive volume, all 4 dots. Look at relative strength and OBV. I think this one looks interesting. It's an expensive stock. I would worry about that 200-day. I'd worry about overhead supply, but the 200-day is another 25% away from where we are. All right, the next one down, Altus USA. Don't know much about this one. I think it's an energy, it might be a semiconductor. Don't remember. But here you go. Stock's in a downtrend. 200-day bothers me, but we had a breakout here. So, a move up to the 12 is almost probably 15% from there. I'll probably pass on that. Champions is a energy services company. So notice how by only looking for those stocks with lots of dots, things are coming right to the top that are bullish. Now, the market matters, and I think we got perhaps a little bit more to the upside here. Looking down, Z-Lab is a biotech. Don't like that big topping tail, but I do like how it had a nice breakout above the 200 here on massive volume on Friday. Again, this 50 weekly is bothersome. I have to clear it, but this is one that looks interesting to me. Elastic is another one that seemed to break out. Now, for the longest time, breakouts fail. But here's a breakout with a gap above the 200, a EMS indicator, volume, momentum, and a breakout, strong relative strength in OBV. So those look interesting to me. I've already gone through the list. I'll share with you some of my choices in a moment. Since I said discretionary was looking the most interesting, you could actually build a list of just the discretionary stocks. And let's take a look at some of them. SEAS, SeaWorld Entertainment. Remember when I lived in San Antonio, we'd go there all the time. Then we had kids and we stopped doing things like that for a few years. But you have a breakout with volume and momentum, good volume there, EBV, OBV, relative strength supportive. I worry about the 200 right above. Azul is a South American airline. Boyd is a gaming stock. I liked MGM a little bit better. Let's see if I can get MGM up. But looking at it now, it looks very similar to Boyd. So this is how I attack the market. I start with getting a sense of my long, short, balanced. Right now I'm long, but still have cash on the side. Then I look at where the money's flowing and if any industry groups are standing out. On the weekend, I do both the tops down and the bottoms up, but remember I built that weekend review by putting in some of the stocks that are in the leading industry groups. And then I put a watch list together, which I'll trade during the week. Now, I share with Wealthchart owners my combo leaders list. This is a list of about 600 stocks. And you'll find most of the stocks that we talk about during the program are in this list. And there you are. DHT, Kroger, Zscaler, and Champions Corporation. All four look very intriguing right here. And they all are sitting at the top of this list. Disney is interesting because it's really oversold. Is it turning up here? Can it get through the 17-day? I don't know, but it's one I'm watching. So there's a number of here that I thought were interesting. Now, I compile a list. I can tell you that the buy watch list this week was massive compared to the last three. That usually says there's more attractive stocks setting up. It doesn't mean I'm going to buy any or all of these. But this is the list that I'll be playing. And if just look at what we just talked about. DHT, KR, Zscaler, ESTC. FLR is a infrastructure play. They passed a lot of infrastructure money. They're supposed to be building and highways and bridges. This is a company that should benefit. Nice move up above the 17 on Friday. FTI is another energy services company. This one used to be very high. Sting is another one of the energy carriers. Now, this is one that's been leading for a while. We've been talking about this one. You can see it's got put in some signals there. But this is one that looks like it's ready to run again. FCX, I talked about a couple weeks ago, and it's finally starting to move. I think if the dollar continues lower, then some of these resource plays like FCX might do something. Funko, I don't know what they do, but they're starting to move as well. So the beauty here is that rather than look at thousands of charts and look to see which ones are moving, I use my dots to tell me who's moving and my bongos to find stocks in uptrends that have had recent pullbacks and are starting to move again. I hope you have an awesome week. I'll be back middle of the week from my work trip in Paris. Yes, work. And I'm going to go watch some football. Have an awesome rest of the weekend, everybody. Thank you.